Welcome back everyone to the videos related to goods and services tax. So I hope you have gone through the previous video in which we discussed about the benefits, the features and how the calculation of tax payable is done in the case of intrastate supply where there is state goods and services tax and central goods and services tax. How much amount of money should be paid to the state and how much amount of money should be paid to the center. Okay. So in today's video, as a continuation of the previous one, we will discuss about the calculation of GST payable in the case of interstate supply. So when we think about the calculation here, we should bring into our minds the concept of IGST, which is Integrated Goods and Service Tax, that is collected at the time of interstate supply, that is from one state to another state. So in the beginning, we will see how intrastate supply takes place, and in the second stage, we will see how interstate supply takes place, and in the third stage, again we have an intrastate supply taking place, and at the last, we have how much amount of money should be paid to the or how much amount of revenue is received by the state and by the central government. Okay, so let's start. So, in the state supply of goods or services, the supplier would charge IGST at specified rates on the supply. So, remember the concept of IGST, which means Integrated Goods and Services Tax, which is charged at the time of interstate supply of goods or services. For example, between Kerala and Tamil Nadu or between Tamil Nadu and Karnataka, etc. So we'll see this concept with the help of an example, same like how we saw intrastate supply. Okay. So here we assume that we have IGST at the 18 percentage of rate and CGST and SGST is at 9%. Okay, so let's start. So we begin with the first stage where the supplier and the recipient, both the persons, that means in simple terms, the seller and the buyer belongs to the same state. So what is the type of supply happening there? That is intrastate supply. Okay. So supply of goods or services by by Mr. X of state 1 to Mr. A of state 1. So Mr. X and Mr. A belongs to the same state. So here we have a value charged for supply of goods or services 10,000. Then CGST at 9% amounts to 900. SGST at 9% amounts to 900. So the total price charged by Mr. A from Mr. B for this intrastate supply is 11,800 rupees, of which 900 each is the CGST and SGST respectively. Okay, so this is same like how we saw intrastate supply in the previous video. Okay, I hope this is clear. So the X is the first stage supplier of goods. Say for example, X is the seller of raw materials. So Mr. X sells the raw materials to Mr. A, who purchases it from him at a price of 11,800. Okay. So here, since X is the first stage supplier, he does not get any credit of CGST, SGST or IGST. So after seeing how IGST is calculated, we will also discuss about the input tax credit received by the suppliers in these cases. Then, this is the second stage where the supply of goods or services by Mr. A of state 1 to Mr. B of state 2 occurs at a value addition of 20%. So remember here the transaction is between Mr. A and Mr. B and they both belong to different states. Okay, different states. That means interstate. So in the case of interstate supply, what do we charge? Or what type of tax is charged? That is IGST. Okay. So here after value addition, the value charged for supply of goods or services becomes 12,000 rupees. And since it is an interstate supply, there is IGST charged at 18%. So 2160 will be the tax amount. So Mr. B of state 2 needs to pay 14,160 rupees to Mr. A of state 1 in this case. Okay. So let's see what happens. Mr. A paid CGST of 900 here and SGST of 900 here. What type of tax is this? This is input tax. Okay. Then Mr. A received 2160 rupees as tax, which is received as a part of this total price. So what type of tax is this? This is output tax. So the credit between input and output tax becomes the input tax credit. So let's see. This is the computation of IGST that is payable to government by Mr. A. So IGST payable by Mr. A is 2160. See this amount. And so this is the IGST or the tax amount which he received, that is output tax. So he paid 900 rupees of CGST and 900 rupees of SGST at the time of purchase of the raw materials from Mr. X. I think you remember it. Okay. So the IGST, the net amount of IGST which is to be payable to the central government is rupees 360 only. So he gets a credit here. So let's see the explanation. The IGST charged on Mr. B of state 2 for supply of goods or services will be remitted by Mr. A of state 1 to the appropriate account of the central government. Okay. So Mr. A, when sells the goods, he collects an amount or a price from Mr. B inclusive of the IGST amount, and the appropriate amount of rupees or amount of tax will be remitted by Mr. A to the appropriate account of the central government. And state 1 is exporting state where Mr. A belongs to. And state 1 will transfer SGST credit of rupees 900 utilized in the payment of IGST to the central government. Okay. So this is the case when interstate supply occurs. So this is third stage. So first we had Mr. X supplying raw materials to Mr. A. They belong to the same state. And second stage, Mr. A to Mr. B, where they belong to different states. And third case, we have Mr. B supplying goods to Mr. C of the same state. Okay. So they both belongs to the same state, Mr. B and Mr. C. And here also there occurs a value addition of 20%. So after value addition, the value of the goods becomes 14,400. Since it is within the state, the supply is within the state, that is intra-state supply, what is to be charged? CGST and SGST is to be charged at 9%. So we have 1,296 each. So the total price charged by Mr. B from C is 16,992. This is simple calculation which we learned in the last video. Then, so here Mr. B paid an IGST amount of 2,160 here. That was IGST amount. And here he paid 1,296 at 9% each for CGST and SGST respectively. So let's see how the credit takes place. Is there any difference between the credit happening here and in the earlier video? So here Mr. B will avail credit of IGST paid by him on the purchase of goods or services and will utilize such credit for being set off against the CGST and SGST payable on the local supply of goods made by him to Mr. C. So he is getting a credit in the case of IGST paid by him against the CGST and SGST payable by him. Okay. So let's see how the computation of CGST, SGST takes place. in the case of Mr. B, that is payable to the government. Okay. So CGST payable by Mr. B is 1296 and credit of IGST available is 1296 itself. Okay. So there is an important point to remember of which we will explain it in the coming slide. Then now we have CGST payable to central government as nil. Okay. So then SGST payable is 1296 and that amount we got it from here. SGST 1296. And now we have a less credit of IGST. So total IGST was rupees 2160, of which SGST amount is reduced. Okay, that means output tax and input tax. So we have a net amount of 864 as credit. So we have SGST payable to the state government as rupees 432, the difference between these two amounts. Okay. So this is in the case of Mr. B, the amount payable by Mr. B to the government. So central government will transfer IGST credit of rupees 864 utilized in the payment of SGST to state 2, that is the importing state. So this credit will be received by state 2, which is the importing state. So we have an exporting state as well as an importing state here. So this is a statement of revenue earned by central and state government in this case, where there involved three transactions, three stage of transactions. So the first one was the supply by Mr. X to A. Then that was an intrastate supply. So central and state government got a revenue of 900 rupees each as tax amount. Then transaction took place between A to B. That means it was IGST. So there was a amount of 360 which was to be payable to the central government. Then transfer by state 1 to the center. A transfer of tax amount by state 1. State 1 is the exporting state. So exporting state to the center is 900 rupees. So that 900 rupees will be deducted. Here they already paid an amount of 900 from their tax revenue to the central government. So that 900 will be reduced there. Okay. So the state 1 is the exporting state and state 2 is the importing state. Remember that also. Then we have supply of goods and services by Mr. B to C. What happened? That was IGST transaction. So the revenue was to state 2. Okay, so this is as mentioned earlier, as discussed earlier, GST is a consumption based tax or destination based tax. So that means the state which consumes the product or the goods or the service, the tax is happening there. Okay. Then transfer by center to the state 2. That is 864 is to be paid in the case of IGST credit by the sender to the state. So this amount will go to state 2, that is the importing state. So this is the revenue that both the central government and the state government receives. State government, that is state 2, that is the importing state. That happens at the time of interstate supply. So we have seen how tax calculation happened in the case of intrastate supply, then interstate supply, and then the third stage intrastate supply. So first of all, you go through the videos that we discussed about intrastate supply in the previous class and then make it thorough and then come to this video to make it more clear. Otherwise, it will be jumbled up. Okay. So let's see how ITC or the input tax credit is utilized. There is a particular systematic rule for the set off of ITC, that is input tax credit. For the credit, for availing the credit, there are certain conditions. Let's see. So input tax credit of CGST and SGST or UTGST is available throughout the supply chain. Okay. So CGST and SGST or UTGST, this is available throughout the supply chain. We can set off. So cross utilization of credit of CGST and SGST is not possible. So the credit that we got from CGST cannot be utilized for SGST. Okay, that cross utilization is not possible. So this is one of the main point which I talked to you before, that we will see here, should be kept in mind at the time of set off or at the time of making credit. So, CGST credit cannot be utilized for payment of SGST or UTGST and vice versa. Okay. Then, cross utilization of credit is allowed between CGST, SGST, UTGST and IGST. That means credit of CGST is not utilized, or cross utilization is not allowed with SGST. Okay, so credit of CGST should not be used for set off of SGST, but credit of CGST can be utilized, cross utilized with IGST. Okay, so with CGST and SGST it is not possible. At the same time, it is possible between CGST and IGST. Then credit of IGST can be utilized for the payment of CGST, SGST, UTGST and vice versa. So this is the opposite of this fourth point. So IGST credit can be cross utilized, but at the same time the credit of CGST cannot be cross utilized. Okay. So I hope this is clear to you. Go through the video again and understand the concept and understand the calculation. Okay. These are the references that we utilized for making the material and making the video. So I hope you have understood what is the concept of interstate supply, where the supplier belongs to one state and the recipient belongs to second state. Okay, state 2. That is, one state will be the exporting state and another state will be the importing state. So in the next video, we will come across certain important terms and definitions related to GST, of which you should understand the concept of certain definitions and certain terms, so that the portions to cover forward will be easy for you. So that's all for today. Thank you.